I've come out of my cave to record this video. In this video, ultimately, we're going to calculate what the owner is worth. But before we can calculate what the owner is worth in a sole proprietor, we first need to calculate the value of the assets, total assets, and the value of liabilities. So in this video, I'm going to look at the calculating of a sole proprietorship's assets, liabilities, and what the owner is worth. Caleb is laughing because he's being polite at my attempted sense of humor. This is a healthy cycle, the yearly accounting cycle of the bookkeeper. I've put this slide on just to point out before we do the calculations where we're at, and we've done the final accounts at year end. So transactions have taken place, they were recorded on source documents, the source documents were journalized, entries were posted to the ledgers, reconciliations took place, there was a pre-adjusted trial balance, adjustments happened, and we got a post-adjusted trial balance. Final accounts were drawn up, and now we're at a stage where we're able to calculate the value of the assets at the end of the year and the value of the liabilities at the end of the year, and therefore with those values we can calculate what the owner is worth according to our books. So this is where we are. A post-closing trial balance has been drawn up, and we're going to take the numbers from the post-closing trial balance and we're going to do the calculations. In front of you, you have a post-closing trial balance at year end, and we're given the following numbers. And remember, we're working towards calculating what the owner is worth. But in order to do that, we first have to calculate the value of the assets and the value of the liabilities. So we're looking for, there's a question mark, the amount for capital, what the owner is worth. And there you can see there's a definition of non-current assets. So what we need to do, all these items listed here, we need to categorize them because we need to determine which of the items are assets and which of the items are liabilities in order to calculate the capital amount, owner's equity. So what is a non-current asset? It's a long-term asset, an asset bought to keep for a period of time, and the asset is used to generate profit, for example, equipment. Just what is a current asset? It's either cash or an item that is going to be converted into cash within the financial year. For example, trading inventory. Then I've got definitions here of liabilities. A non-current liability, a long-term obligation, and current liabilities, short-term obligations. So those are the definitions of assets and liabilities. Now what we need to do is all these items need to be categorized. I've put in there loan and bank. They fit the definition of a liability. A loan, this happens to be a long-term loan. It's a long-term obligation. And interestingly enough, bank has a credit balance because Calibre Education has gone into overdraft with the bank. There's a rule, liabilities. So as this overdraft gets bigger, the account will get credited. An increase in liabilities gets credited. That's the rule. So this bank account, the bank account of the business, is actually a liability because Calibre Education owes the bank 9,428. Calibre Education has an overdraft facility with the bank, and they have spent more than what they had in their bank account, and now they are obliged to pay back the bank the amount of the overdraft plus interest. Output VAT, if you do VAT in your country, it's an amount of money that needs to be paid to the revenue services. It's a liability. It's owed to the revenue services. Trading inventory has value. It's an asset. It's a current asset. Input VAT is an amount of money we can claim when we buy goods that are used in the operation of the business. Petty cash fits the definition of an asset. Equipment fits the definition of a non-current asset. Vehicles, non-current asset. So you can see I'm categorizing all these items according to the definitions which I gave you at the start of this slide. Debtors control, people or business to whom we've sold to on credit. They owe us money. It's an asset. Creditors control, we owe our suppliers. That's accounts payable. By the way, debtors control, accounts receivable, creditors control, accounts payable. So what I've done here now is I've categorized all these items into assets and liabilities because we're trying to calculate owner's equity. Here I have the accounting equation. Assets equals owner's equity plus liabilities. Now what we're trying to calculate is the value of the owner's equity. Now if I take this plus sign to the other side of the equal sign, according to math rules, the plus will become a minus. And that will leave owner's equity on the right hand side. We are trying to calculate owner's equity. So how do we calculate owner's equity? It is assets minus liabilities. So I've taken the accounting equation and I've changed the subject of the formula. The subject was assets. I've now made it owner's equity because we're trying to calculate owner's equity. And owner's equity is equal to assets minus liabilities. I took the liabilities across the equal sign and the plus sign changed to minus. So to cut a long story short, owner's equity is equal to assets minus liabilities. Then I took the numbers from the previous slide. Remember, we categorized these, and all these accounts we categorized as assets according to definition. If I total up the assets, it's 486,053. And then we identify these accounts as liabilities. And if I total up my liabilities, I get 260,996. And in order to calculate owner's equity, I say the total of the assets minus the total of the liabilities, and that will equal to 225,057. So in this video, we wanted to calculate owner's equity, which we've just done, but we first had to calculate total assets and total liabilities. Then we had to subtract the liabilities from the assets, the value of the liabilities from the value of the assets. And according to our calculation, the owner is worth, in the books of the sole proprietorship, 225,057. That's according to the business. We're not looking at the owner's personal records here. We're looking at the business books, and owner's equity, or the capital amount that was missing, is 225,057. So there are a couple of calculations you can do at the end of the accounting period. So I'm going to go back into my cave, but before I go back into my cave, I'm going to roll the dice. Only one. Hopefully next time I roll a 6, but keep rolling the dice. You never know what could come up.